The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the DAX like we usually do, but folks, right after that, stay tuned because I have finally figured out why this market is going up forever. One of our esteemed listeners and contributors here in the Tiger Den, MR, sent me the chart that explains the whole thing, and I'll cover that after we cover this DAX that we're looking at. As you can see, the DAX has made a potential double top. The very first chart that we looked at shows a small 135 pattern that occurred this morning. It sold off a little bit from that level. But let's get to the metal, folks, and why this market is going straight up. It's so simple that you just won't believe this. If you'll remember, just a few days ago, in fact, it was back on September the 29th, we received this nice chart that basically shows the fear and greed index of what's going on here. Yes, it is Fed juice, but it's also related to this. You know, the fear and greed index was trading at 85 back on September the 29th. Now let's take a look at where it went yesterday or the day before yesterday. We'll put that one up here to take a look at it, and you'll see here that it is now moved to 95. Can you believe this? Now we know what is going to happen, because take a look at the next one. This is the one that is going to really explain the whole thing. Are you ready for this, boys and girls? Take a look at this one. This explains the whole thing. Mr. MR was nice enough to send this chart because in the small type, in this chart, it's very, very small. I had to blow it up here at the very bottom. You'll see it marked in that green box. This index must go around 2 times in order for it to be valid. So it's got to go around and around twice before it's valid. So I don't know whether we're in the first or second turn on this. But with the greed index at 95, we've never seen that before. We just broke an all-time record for the number of closes in the same direction. That's correct. So I probably think it's going to go up maybe forever. We'll see. It can go to 126 on the third spin, Mike, but I'm not sure. And we'll see. You're asked the question, where was the fear index when we were in March of 2009? It was, I believe, really close to plus 91. It was in the 90s. I remember that. But from that level, I'm not sure. I wanted to answer one of the questions from yesterday that we were talking about the heating oil setting up for a potential sale. We posted this in yesterday to take a look at it, and you'll see that this was heating oil yesterday. We were looking for it to get up around that 61% retracement is what we would like to have seen it. That was around the 81 level. And if we take a quick look at it, what it's doing this morning, because we do have that slightly bearish bias in the oil complex, we'll put this up and let you folks take a look at it. You'll see that we did get up to that 81.50 level. And now, so far today, we pulled down to the 61% retracement from that level. If you were doing something in that, you certainly wouldn't want this to, go to a losing trade under any circumstances. So pay particular attention to that, and we'll see if that's going to, if it's going to work. Remember, it's all related to probabilities, folks. That's really what it's all about. Let's switch over and take a look here about the bond market, because we've been talking about this bond market for quite some time. We'll pull up the daily chart that we've been looking at. It's had a very bearish bias for a considerable number of days, going back to September the 5th. When we made the big ABCD pattern up there at 158. We're now trading around 151 and change right now. But if we go and look at this at a little bit, hold on, let's get this up here so we can see it a little closer. Hold on one, please. This is where 1 second. This is where we were last night. The bonds took out those lows at 152 that we made way back on the 28th of September. And that set up a potential for the market to come down to this 151.10 level, as you can see that. Now, we've already made the 127 expansion at 151.22, but we still have the 1.618 expansion coming in here at 151.09. And if you'll notice closely on this, this is also the 1.27 of the higher move that went back into September. So there should be some pretty strong support in that 151 level. And that's also very near the 78% retracement on the long-term daily chart. So that should be it, and we should start to possibly, see a rally. But any rally now, this is just my opinion, will be pretty hard to get above the 152.08 level, because it broke down from there, and usually after it breaks down, it starts to move in that direction of as resistance. In other words, old support becomes resistance. That's what usually happens. But right now we're looking at 151.08 in the Treasury bonds for today. So just write that one down to take a look at it. Now, I would like to talk just a little bit here about the. Hold on 1 second. I have to get it up here and. Take a look at this. Where is it? Oh, I've been asked, fortunately, by a couple of people that sent me an email regarding the 2009 model that I posted yesterday. This is, let's get it up here. We'll take a look at it here, and we'll show this is the Bradley model showing from 2009. And of course it bottomed, right within a couple of days of that low. Now it made a double bottom actually. It didn't quite make the second bottom, but we hit March 5th was the low, and then we came down and tested it again on March 9th, as I recall, and then we started the big move. But it is a 3-drive pattern, very similar to the one that we looked at yesterday in the Dow Jones. And of course the Dow Jones, we'll put this up here and let you folks take a quick look at it if I can only find it, and that's going to be the $64 question. And right now I can't find it, but hopefully I will. We'll see. Well, not going to worry too much about it. So let's just look here, what we're watching here. All right, let's get on to the euro, because yesterday you'll notice that we were looking at that euro to hold that 117 level. The most we got out of that was about 30 pips. That did not work. And what we're watching now, as the market started to break down, you'll see here 150. I don't know what you mean, B, about the ZB 158. If it gets to 158, I'm going to be really surprised. Okay, we'll take a break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we want to take a look at the gold market here. As you notice here on this 4-hour chart, we have a price projected in gold to come in around the $12.45 per ounce level. We're only about $20-some away from that, which we might have made it today with the jobs report, but so far that hasn't happened. But what we should do is to take a look at this and break it down into smaller frames so that we can take a look at what's really going on inside of the gold market as we look at it closer. As you'll notice here, as you look at the 30-minute chart, you can see that we've been in a pretty substantial downtrend since the 26th of September. You'll notice this parallel channel that I've lined up right here. You can see the two equal rallies we had. Those were each $14, and it stopped exactly at almost exactly at the 382 on the first one, and 61% retracement on the third one. And that tells us that we're heading down to these lower levels. Now, if you'll notice the ABCD structure from the last rally, that took us to today's low at around this 1265 level. So far, I haven't checked it recently, but that's what it should have got pretty close to that. We got to 1265. And it's only 1267.60, but anyway, that tells us that this thing is still heading down. So we could get a little bounce from this level, but the bounce should not be any more than $12. And now we're heading down to the 1245, 1250 level, where I think it would really be a very, very low risk buying opportunity is what it would appear to me. So anyway, that's what I'm looking at right here. We will have Rich Anderson as our guest here at the next break, but we were going to go through some of these others. I want to continue on with this gold idea because I wanted to show you what happened this morning, and we'll pull this up here to let you take a look at it. And this is what I usually do. I start with a 4-hour, and then I go down to a 30-minute or 15-minute, and then gives a better idea of what the swings are doing. You'll notice the key thing here to watch here is you'll see the big 61% retracement. That's an equal swing like what we had between September 28th and 29th. took exactly the same amount of time, the exact number of dollars. I mean, folks, these market repeats over and over again. If you look for it, it can really be helpful. Now, today, look what's happened. You'll notice that after the jobs report, the market rallied up to a 382 retracement of the old high that we made back here yesterday at 1285. It went to exactly 382. Then it broke down. As you can see, the price swings on this measure to somewhere between 1258. But remember, the larger one that I think is controlling this is around the 1245 level. That's that 4-hour chart that should line up very, very closely, to what we're looking at as we look at some of these things here. By the way, folks, this is baseball season, as most of you remember. And one of my, of course, when my kids were little, we were in Los Angeles, and my friend Tommy John was playing for the Dodgers, so we would go to almost every Dodger home game, and we got to go into the, into the clubhouse, and everything was really exciting. My kids had their own score sheets. They knew how to keep score, and they still have them to this day because they have a lot of autographs from the players and stuff. But what was interesting is, baseball is all about statistics, folks. I don't know if you know who Billy Beane is, but he's the manager, general manager of the Oakland Athletics, and he changed baseball. There's a movie about it called Moneyball with Brad Pitt, and it's all about statistics. And over the past 20 years, Oakland has had the 4th lowest payroll in baseball, yet they have the 5th best return of all the teams in baseball. So. John Henry, who was a big commodity trader, of course, owned the Red Sox, and of course he was fortunate enough to win the World Series in, I believe, 2004, when they swept the Yankees through 4 games in a row after being down 3-0. Anyway, it's all about how they statistically look at it. In other words, if a batter comes up, they know exactly what the probabilities are that he is going to get a hit based on his past performance against right-hand pitchers, left-hand pitchers, also on what time of the inning is it. Does he get his hits in the lower part of the inning, early in the game or late in the game? All that stuff is put in statistics. And folks, this is what John Jameson is going to do for us on October the 16th with the webinar. He's going to cover this for the Euro and also for the S&P 500 to give you the best statistics for looking at a potential buy or sell and which day of the week, and the average swing. And it's just really an amazing set of numbers that you're really going to like. So if you have a chance, be sure you tune in on October the 16th to listen to what he has to say. You're not going to get this place anything else. We have a question about the volatility index. Folks, I love the volatility index. I've been in it several times here. I'm still in it again. Fortunately, yesterday was the day that we went short the Dow. And the Dow E-mini in the face of all of this. But boys and girls, this is mother, God, and country stuff. I mean, when you get a fear greed index at 94, it's just a matter of time, what's going to happen. And the other thing, we happen to be short Apple from 165 too, but 165. But this is another example of the news being in the announcement. Let's just take a look here. Take a look here at Apple for just a second. What it's actually done here over these past few days. We had that big ABCD up here at the 1.618 level. That's a weekly chart going back to 2005, I believe. And that was a 3-drive pattern. And now you notice that we just rallied back 382 over the past 9 trading days. And this market appears to be ready to go. Now, what I've done here is to raise the stop to 158, because if it gets above that, this pattern would be broken, and then you'd be able to see what's going to happen. Yes, someone asked a question. Yes, I did. I did 25.45 is correct. And basically when you're doing this, you use a 10-point stop. But what I'm referring to now is the Fibonacci 24/7 service that we have here at TFNN. We did the Dow E-mini yesterday, just about 3/4 of the way through the day. I think it was trading at 22,690, something like that, 22,690, risking 150 points, which is $750, which you have to risk, given the volatility that we're having with the market breaking all kinds of records. Much like, it's this, folks, this is upside down pattern of March the 9th, 2009. That's it. I mean, I've got my little burro over here, Walter, and he's ready to go out into the desert. We're packed up with water, a little bit of vino, some good beef jerky, fixed up by Jorge here in Tucson. So it's going to be really interesting. The short-term pattern was that was basically that Dow pattern that we had yesterday, Mr. Z. I'll post this as of yesterday, and you'll be able to you'll be able to see. We'll be back with Rich Anderson, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're having a little bit of technical difficulty. I think Rich might be really busy today, being with the jobs report and everything. Plus, we have a lot of things going on in the grain markets as far as looking at major support. We'll start out here. I want to do a couple things here to walk through these. As you can see here with the, start out with December wheat. This has got a lot of good technical things, and we're right over the full moon, which was yesterday. You'll notice that we had a perfect 61% retracement. We hit it exactly yesterday at that 438, I believe, was the exact low. If we get below 435 in December wheat, that would not be a very good thing from the bullish standpoint, because we have rising bottoms now and we have rising tops over the past month that usually suggests that the market is getting ready, to move to the upside. We're also seeing the same thing in the Treasury, not the Treasury bonds, but in the let's just do the grains here. I can do this directly from the letter here, so you'll be able to see it without too much trouble. This one happens to be the January. We're switching over to January soybeans from November, and if you'll notice this little pullback that we had here this week, that was again right at a 61% retracement. So you're seeing the exact same pattern in the soybeans and the wheat. They look exactly the same. Now the corn is not the same because it's a lot weaker. We thought that corn had a chance for December corn to get down to 340 a bushel. We're trading around 349 right now. It still might not be able to do it, but it doesn't have the same pattern characteristics that we have with the beans and also the the beans and also the wheat. So that looks, real interesting from that standpoint. And the one that has been leading this, of course, has been the soybean oil. And we've been fortunate enough to catch this one because it's had a really good move here this week. We came down, and you'll notice that 61% retracement was the exact low in the oil market at 32.55. We rallied up to the 33.5 level, so it's rallied well over $600 in the last few days, and it still should have some more to go up into that 34.65 level. Someone's asked the question, how do I do these charts without listening to anything, folks? If I listened to anything, I wouldn't understand what the heck I'm doing. I might not understand what the heck I'm doing anyway, but the news is just flutter, because if you're a technical analysis, just remember that bar chart that you're looking at is the sum total of all the buyers and sellers that are out there. And they can do a lot of things. They can give you misinformation. They can tell you things that are not true or lie to you. They can give you statistics that are false, supply-demand situations on who's buying and why. But the one thing they can't do is they can't hide from you. And if there's more buyers, prices are going to go up. And if there's more sellers, prices are going to go down. So just remember, that's what technical analysis is all about. My teacher that started me doing this way back in the early 1960s in graduate school was the only value of the Wall Street Journal was the bottom of the bird cage for his parrot. And of course, he didn't even get the Wall Street Journal. He used the Terre Haute Tribune and the Bloomington Times. Let's take a look here at a couple other of these grains. It's really interesting here because this is one that has come down, and this is the Minneapolis wheat. Hopefully we'll get Rich on, but frankly, I think he's really busy this morning. That's really it. But look at this Minneapolis wheat, folks. If you'll notice here that we're looking at the spot where it says last support for Minneapolis wheat. Remember, that was at 610. It's hit 610 3 times this week. So there's very strong support in Minneapolis wheat at 610. I haven't traded Minneapolis wheat in over 40 years, but I bring this to your attention because if you remember this big run-up that we had from May through July, that's when we were having, there would never be any more wheat in the northern part of our the United States because it was all destroyed. Look at it. It's dropped $2 a bushel, folks. I mean, so this is a perfect example of the news coming out, and the market's still going down. And I think that's what's going to happen to Apple. But that's neither here nor there. So anyway, that's what we're keeping a close eye on. Now, another one that we talked about, really closely was the hog market. And the hogs have had a tremendous rally here, especially the October hogs. We had that big 3-drive pattern in the hogs, and it just had one heck of a run. Let's put that October hogs up here. You'll see here, because they've rallied about 8 cents this week, we'll bring this up here so you can take a quick look at it here. And you'll see Costco is down 9. That's impossible. That stock never goes down. There's a 3-drive pattern that you can see here in the October hogs. We're trading above 60, above 62 now, I believe. So it's had one heck of a run, coming off of that 3-drive pattern. So these are just some of the ones that we're, taking and, watching very, very closely. And the next one that we covered last week in the letter, someone's asking a question. I might as well do it now before the break, is about the crude oil. And we'll bring this up here. And you'll see here, you'll notice that we're expecting a correction coming in crude oil. We've certainly got that correction. It's down more than $3 a barrel here this week. So that's equivalent to that same thing we were looking at in the heating oil, folks. If you remember, one of our listeners yesterday asked about that, and we were just trying to reiterate that it had a potential for the market to be, usually to the downside. And one of the factors that we used to determine whether the market was ready to sell off was to look at another component and to take a look at the, you'll see that the heating oil has definitely, come down and made that low, and it's had a small rally and backing off again. So it looks like we have lower prices coming in the crude oil complex. Yes, this is a very key astro date for several different reasons, but the main reason is it's my youngest daughter's birthday. She's 48 years old today. I can't believe that I have a daughter that's 48. That's just mind-boggling. I have another daughter that's 49, so she just turned 49 just recently. So anyway, kids grow up so fast, but boy, that's the best joy of my life, those little kids. Anyway, let's move on here and take a look at another one of these commodities that we were going to talk about today that we hardly ever talk about, and we've had a request for it. This is the coffee market, folks, and I heard something on CNBC yesterday that I actually couldn't believe. There's a coffee shop in Manhattan that sells coffee for $18 a cup. It sells for $500 a pound, and it has a special machine that pumps the steam through the beans. It's like a $14,000 machine, and but coffee for $18 a cup. You can get a really good cup of Joe at McDonald's for $1. 877-927-6648. Call in, ask a few questions, help the old buckaroo out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we were talking about some of these commodities, but when you look at a commodity like crude oil, you can look at several different things, and of course you have to look at the breakdown of it. You have the basic crude, then it's split up, cracked into gasoline and also to heating oil. So you look at the heating oil, and that'll give you an idea of what could be happening. But one usually leads the market, which heating oil has been, and that's basically it. We've got a caller here from Portland. Rich, are you there?
My call, Larry.
How are you?
Good. And yourself?
I think I'm okay. What can I help you with?
Well, I was calling about a small gold miner, BTG, and I was wondering what you saw in the chart recently.
I don't follow those, but I'll tell you what I can do. It's called BTG.
Yes.
If you'll bear with me here, Rich, I can bring this up really quickly if my data is good, and I know that it is. And you're in Portland, Oregon?
Yes, I am.
It's a beautiful place up there. Hold on here. I've got to refresh the chart, and then we can bring it up here. Oh, this has been in a really tight consolidation area for quite a while. This actually looks better than most of them. It really does. Let's just come up here and take a quick look at this. I'll blow this up, and then we'll put it in here. This is holding up extremely well. I don't know what this gold, it's only $2.81, but it's acting much better than gold or anything else. Let's just bring this up. My guess is a lot of these shares are probably held close to the vest by the people that own the mine. That's what I would guess, but I think it has a lot of support at around 250. That's 30 cents and where it is right now. But if you look at this versus the gold chart, this is actually a much more favorable chart.
Well, that's what I was noticing, that it just seems to hold up when things like buried gold gets knocked down.
What's the volume on this stock, Rich? What is it? How does it usually run each day?
Just a second here. I'll show you, or I'll tell you. I won't show you.
That would be good. Yeah.
Right now, so far this morning, it's traded 285,000 shares.
Okay, so it's pretty active. So, it's not a lot of money, but it's acting nicely. I don't think you could get hurt too much by this stock. That's for sure. It looks strong right now. And here's the key. Watch the gold when we get down to $12.45. We're trading at $12.64, so we're $19 away from our gold price. Now, if we get to this gold price and this thing does not start to go up, then I would be worried. But if it can hold this level as gold's dropping another $20, this is a very positive thing for this this relatively inexpensive stock, from my opinion.
Well, that's what I was thinking I was seeing, but I wanted to hear from the gold guru, you.
Oh, so you couldn't reach him, so you called me?
No. You are the gold guru.
Oh, no. That I think you can leave that. That's those titles belong to someone far over my pay grade. But hey, listen, thank you for calling in. And this stock does look okay, but if it gets below 220, then I would be a little bit concerned about it. But right now, it looks pretty good.
Okay. Well, thank you very much.
You bet. Thanks for calling in, Rich. We really appreciate it.
Have a
Okay, we're taking a look here, folks. We're having it markets open for about 15 minutes now. We just had a 61% retracement here in the NASDAQ up here at this 60-60 level. We went down to 60-40. We dropped about 32 handles, and now we're trading up around the 60-58 level. So that's just a snapback rally. But, we could easily go up and make new highs because the fear index or greed index is at 95. It might get to 101. We don't know. But all I know is that we're in an area where they're going to be talking about this in the history books for a very, very long time. That's the way it looks to me. So keep an eye on that, and we'll be able to see what's going on. Anyway, we'll watch these things as we get ready to go, and we'll be ready to do this. The next segment here in just a second. I have to do something for putting an order in, and we'll be right back to you in a second. I don't want to make a mistake here, so hold on one second. And then we're almost ready, and there we go. All right, folks, take a look here at this crude oil. We're getting down now. We've dropped well over $2 a barrel since the last rally high. The price objective on this next move down here is going to be right around. Let's just take a quick look at this so you'll see what we're watching. We've just broken below. Oh, we did it a little early ago. But this tells us that we should get down about another $1 a barrel. In crude down to that 48.25 level. That's what tell us that we're most probably should have some pretty good support into that level. So you'll notice that this last rally we had was almost exactly 50%. It equaled the same rally that we had in early October, and almost exactly like the gold market actually, and it's doing exactly the same type of thing, going down into this. So that's what it looks like from this level. By the way, regarding the previous caller on the gold stock, folks, when you have a stock that's under $5 a share, that's a very low price, of course, but they're easily tradable, of course, and but you remember the old adage is a stock that's under $5 a share has a very high probability of going to zero a share. But there's the stocks that hold up, and these trade relatively well. And it's a good way to learn the patterns and everything is trading lower price stocks. You certainly can't get hurt too bad. I mean, that. Well, you wouldn't think so, but you don't want to put all your pennies in one basket. That's for sure. You want to spread it out, over certain things. I think that's the most important thing. There's some people that said, put all your eggs in one basket and watch that basket. Well, that's okay if you're a professional, but if you're a part-time trader that works for a job, that's a little bit harder to do. So keep in mind that that's something that you should pay, pretty close attention to. That's, really what you're watching here as you're looking at some of these things here. See, the market's, virtually doing nothing. We got the Dow down 40, the S&P's down 5, the NASDAQ is only down 10. So, this market isn't even backing off at all. So it's actually, doing its own thing. So just keep in mind that what goes up must come down, but not necessarily in the stock market. So watch that very, very closely, of course, and I think it'll be something that'll pay good dividends over a period of time. We've got the Christmas gold trading at 1641. Wow, 1264 right now, and we're looking at 1245, another $19 down. I believe that we are going to hit that without too much trouble, but keep a close eye on it because it's it's going to be really interesting whether this is going to be whether this is going to be it or not. But we'll watch it closely, of course. So anyway, we want to move on here to the next thing that I wanted to cover. Hold on, just give me 1 second. We've covered most of the commodity stuff. The target on the wheat, if it works, and you don't want the wheat to go below 435 now. Your risk is only $250, and your first profit objective would be 10 cents, which would be twice what you're risking. That's the way I would look at it. Hope that helps. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a request to take a look at natural gas, which is one commodity that I should really know very, very well. That's my specialty. Anyway, if you'll take a look here at natural gas, we've had a really nice Gartley pattern forming here. It has a perfect ABCD structure coming in at around 2.83, 2.84 level. That's a beautiful ABCD. In fact, if you look at it real closely, you could see a double ABCD coming in there at the same time. This is going to be really strong support here at that 283 level in this natural gas. You'll notice that the high we made way back in mid-September was an exact 61% retracement, almost to the exact tick. And then we've had a pretty good sell-off fulfilling this Gartley pattern that is coming up. You could also make a case that this could be a potential for a head and shoulders pattern, but you don't really have the symmetry from the left shoulder to the right shoulder. That's the bad part. Because when you do a head and shoulders, you should look for that symmetry. In other words, the time from the left shoulder to the head and the head to the right shoulder should be equal in time. That really quantifies the chart pattern that would make it the best. So keep an eye on this natural gas at the 283 level. That would be something that I think would be very, very important to pay close attention to. Remember, folks, that we've got a really interesting pattern here in the gold market. We want to be patient. We're trading at, we just made new lows now at 1263. We're heading down to 1245. We want to get ready. We want to look at the XAU. We want to look at some possible option plays at that spot, because 1245 in that gold is going to be a really interesting factor to take a look at, because it's got, we'll just put this up one more time to show you that it's really heading towards some really great numbers down here. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.